Let's start with that report out of the New York Fed. It's the freshest and its third quarter read on household debt and credit from this morning. Delinquencies are still below pre-pandemic levels, but get this, they've jumped significantly from the second quarter, going from less than 0.5% to 3%, with a particularly large uptick among borrowers with both student and auto loans. For more on these reports, I'm joined by LendingTree's chief credit analyst, Matt Schulz. He's here on set with me, right along with our very own Steve Liesman. It's great to have you both here. Steve, maybe just set us up. Did I capture that correctly, that we really saw this big jump from Q2 to Q3 in delinquencies?
And we remain below the pandemic level. Look, if I was the pilot of the plane, I'd say, put on your seatbelt. This is the landing. And we have some information from the control tower that things are going to be a little bit bumpy, but we're not necessarily going to crash. So if you take a look, I got a couple graphics for you. The first one looks at the total delinquencies, right? And this is the number you're looking at. And when you look at the chart, you see the uptick, but you see that it's still well below. Okay, so this is the new delinquencies right there. And what I did with this one, these are some of my own calculations plus the New York Fed data, is compared it to the 5-year average. You can see the new transitions into delinquency, big jump on credit cards. Why credit cards? That's interest sensitive.
Sure.
Right? So that's a big thing.
Right.
A little bit more on autos, kind of close. Mortgages still down below. Overall still down below. But that overall thing does not include student loans. They're on hiatus right now. So we'll see what happens when that happens. And then, guys, there's one more chart there that shows the overall delinquency levels. That's the one. Okay, that's the landing part there. If you're listening on the radio, it's a chart that slopes down from left to right, and it starts to tick up on the right. How's that description? Is that right?
Not only is it good, but it is interesting to me that going back to the fourth quarter of 2019, we were near 5%.
5%. So it's 2 percentage points below that. 3% number you gave is still better than it was before. Now you tell me, or maybe our expert over here to my right,
bingo,
will explain to me, where does it stop?
Matt, what do you think?
Well, I think that we're going to see delinquencies continue to rise. And I think that to a degree that it's a little bit of a normalization of things, as things have been historically low recently, especially with credit cards. We're seeing delinquencies rise, especially among subprime folks, along with that debt rising. And what it seems to me is that even though people are generally handling their business pretty well, it just feels like there are a lot of people who are not that far away from really struggling, who may be a job loss or a medical emergency or something like that, away from really having some struggles. So it's a difficult time to know.
It's a good point that, you want to see the most resilience right when you're going into a time when we might see rising layoffs and things like that. So credit cards, like Steve said, the rates are going up sharply. That seems to be one area for concern. We've also been talking a little bit about access to credit. So we saw this in the loan officer survey yesterday. You mentioned you're seeing it in credit cards as well, that it's on both sides. But people are starting to face some troubles, but they're also having more difficulty getting access to new products.
Yeah, in the credit card space, in that loan officer survey yesterday, it indicated that both lending standards were tightening and demand was down. So when you think about that and you talk about demand being down for new cards and debt rising, it's a sign that people maybe aren't that confident and maybe hunkering down a little bit. Whereas if they were building debt and they were still applying, maybe people are feeling good, starting that small business, remodeling their house, that sort of thing.